Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here on Friday afternoon, the 2nd of February, just after the close. My name is Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how you doing? It's February 2nd.
February 2nd, and I'm trying to catch my breath. Uh, look at these markets. Hey, they're all going
Action,
up
action, action, my
and
friend.
everywhere,
Even in
everywhere.
com even in the commodities, I don't have a lot to talk about today that's actionable, but man, you could see the setups coming. The setups are getting, put into place, the pieces all being moved around, and this is going to be a really, really opportunistic year to trade. I can see the setups coming.
Yeah, I agree.
Anyway, let's focus on what we have here, not what might happen. Let's look at what we have in front of us. As always, Barry's going to cover the big five, which is ES, bonds, gold, crude oil, copper, the dollar, and the euro. I cover the commodities, and looking through them, we're going to talk today about two of the best that we've seen for a while, wheat and coffee. So without much ado, let's jump in on the ES, which made a nice push above the 180 today.
Yes, it did. And we were watching this. This was the whole big setup to watch
Yep.
here and on the weekly, and we'll take a look at the weekly in a second. Actually, the way it worked out, it's not a whole lot of work, honestly, because at least we have something to go by.
Right.
We left last week talking about this 49, 46, saying, basis the weekly, this is resistance, 180 degrees up. And if we can't really get above it and hold above, then, we'll have to look for this 48.51. And that gives out, we could have a high in place because we had a 90-degree right here. You can look here. We had a 90-degree move from the low to that high. So yeah, 90 degrees from here up until right up the high. And what happened was, as of today, we broke above it. So now, we talk about break above and hold
And
above,
stay above, right.
stay above. If we can, I mean, today we didn't, the whole body of the day didn't hold above it. You can see there in green. But if we can, as soon as we can manage to get above, I mean, this is pretty good. We have the open and the close above it. So, yeah, it's convincing. And if we can hold above that, I think, up and away. I think we're in the cycle to do that.
Hmm.
So why not, right? And March, what's interesting, we have a number of things lining up in March.
Yep.
We have 360 degrees from the October low.
Hmm.
And we also have 90 coming up very soon from the last low. So a 90-degree run, 90-day run is, so here it's 90 degrees, but the 90-day run is the other count we can have. We have a
Sure.
count.
Trading days. Yep.
So that's the other count. Other than that, no, you just have to go with the trend, and there's nothing much to do.
Hey,
Especially,
Barry,
yeah,
put a little ABCD on from your October low and then anchor it in the middle with this little congestion here at the half square.
that should be kind of insane.
We're almost there. It's a nice target.
What you're
Not
talking
that high, not that high. Down here, down here, down here.
this one here,
Yeah, yeah, that
this
cluster.
congestion. Okay,
Yeah.
I'll move it there. Yeah, I'm getting a little bit too eager.
Yeah, that's a monster move there. Possible though, for sure.
Yeah, it's definitely possible. I think when we start going sort of ballistic, anything's possible.
There you go.
Yeah, so that's certainly possible. And
5,035 roughly in that area.
yep, and might as well get used to the 5,000s.
Yep.
We're going to be in the neighborhood.
Hmm.
And well, I mean, the thing what I was going to say was if we can close above 180 and not close above, but also hold above, then really the next half square is 5,300.
Yep.
Way up there, and that's a lot of trading. So we'll see how we get there, and if we get there, the point. I mean, the reason that 5,300 looks good from a Gann perspective, because we set up levels from the October low, this October low, and we set up levels from the March low and October from last year. So they all kind of
Hmm.
line up right around 5,300, really.
Hmm.
So as unbelievable as it may sound, that this really does open up. and look at the steep angles we're holding, you know. The move that came last couple of days didn't even get close to the trend line. So I think it's proving to be very robust. And we blew out the cycle that was in place, the 90. I think we looked at that on right there, right? There's a 90. And we had it turned down, but moved right back up. So that's the state. I think for next week, it's really easy peasy because we're above 49.46. We're in a really, really strong position. So go with it. If we take out today's low, so here's the really important part. If we take out today's low, 49.25 and 3/4, but let's say 49.25. If we take that out, then this will pop up as a false break.
Right.
And then it's a whole nother game. So we're always, we're always looking both sides of the street. Continually.
For sure. For sure.
That's just basic survival. And the reason I say that is we can see, if you take another important high, it happened here, false break, and we had a nice break to the downside. Here's the high. We messed around for a few days, had to move up, false break,
and then boom,
down. So because of this sort of behavior, we have the trust issues. So we have to look at both sides. And so the key here is to see if today's low gets taken out. That's really the key. As long as whatever price action we have next week is above today's low, right there, we're in solid shape, and go for it.
The other factor to think about is how many people are cheering this. Everybody's doubting it. Everybody's saying, "Oh, this is a bullshit move. How can it be? The economy's horrible. The country sucks." It's like exactly what these crazy moves come from, that kind of sentiment.
Exactly. And long as that persists. So, when that crowd says, "Oh my God, this bull market's amazing," it's pretty much over, right?
Yep.
I was going to say only other thing I noticed was this half square. We're coming up into this half square.
It's almost price and time there.
It's almost price and time. It's 72.
Mm-hmm.
And I mean, it's good to know these things and the reason I talk about, just because we look at both sides doesn't mean we're playing both sides. What we want to do is we want to look at what else is lining up. Like, let's say we have we talked about a potential false break setup here. If we have a setup, is there anything else to support that? That's kind of what I look at, how I'm looking at these things. And 108 degrees is sort of one of those hidden squares that come up and it'll get you when you're not looking. Just like 101, 67, so we want to look at those. So we have that coming up. So if we get that false break scenario and we take out today's low, we know there's something else there. And the reason that's really important, and I want to bring it up and just talk about it, is because of this check back we had on the way up.
On the 72, yeah.
On the 72. Yep. So that makes the 72 a valid square to watch. All right. So that's the story with that. Now everybody knows where everything is.
Look at the weekly.
Yeah, let's go to the weekly. Now, weekly is really important because this 90 is a really, really key point, and we really hit 3/4 of the square with price and time. Now we can say, basis weekly, basis weekly, the rule really is we have to get above and hold above the 90.
For sure.
That's just the way it goes. Now, so we'll keep that in the back of our minds. We have the lower time frames to work with, so fine, but just keep this in mind. And we'll play along, see what happens. But like I said, if we're trading above today's low, I think we're in good shape. No, just go with it.
You ride it till it stops.
Exactly. And that's what you can do. You pause at the critical points, you wait for some evidence. If the evidence shifts to one side or the other, you have to go with it.
That's it.
That way you're not tied to the news or this or that and what somebody said. So here's the 30-minute. I just wanted, since we've been doing it sort of as a habit, just to cover it. So this week we started up above 48.94. I mean, that was sort of the critical level to watch. And we were watching this every day with great interest. 49.26, which we talked about last week. And
Man, look at that pullback.
yeah, I mean, pullback today was
Right to it.
right to it. It was very, very good. And we also had the check back yesterday before we dropped in. Of course, we dropped right to our next level, which was 48.70. And so the bracketing has been really good. And this morning, or yesterday, we held below 48.94
Yep.
for a few hours, couldn't really make it do. But once we got above, and here's a got above, hold above thing is right there.
Yep. That bar right there.
Got above and held above right there. All these three bars. And then we started to move higher, broke through, came check back to 49.26. And I had this 49.92 drawn up, I think Monday. And with this block drawn in the buffer zone that I do,
Sure.
It happened at the high today, perfectly into the buffer and
Yep.
burst.
Very nice.
And so anyway, as of Friday, it's there. We'll see what happens. This 50% square, a few people asked, it's 49.81 is the level. And it is an important level. So we'll see how we handle that come next week. I wouldn't be surprised if we come down into 49.50 area to check back, all these, there's a decent support level there now. But basically, as long as we're above 49.26, hey, it's in pretty good shape. And if we can get above 49.80, fine, don't fight the tape.
That's right. Bonds did perfectly this week.
Yeah, bonds responded perfectly to the points. We were looking for the counter trend to halt, sort of stall out around 126. If not, definitely at the square, and we did that and reversed. We take out 119 and a half, well, 119.16, and we talked about this ABCD being really important. If we take it out, we'll probably have a lot more to go. So I think both of those things are in play now. If we take these out, we could go.
Yep.
We'll keep an eye out for that. Watch those levels. Yeah, for now, I think that was it for the 124 was it, the upside.
And you got that lower high, so all that could kick
Got
in
the lower
really
high,
nicely.
reversed hard, took out,
Yep.
stays low, with the price actions there. Looking at the weekly bonds, we did get up into our little resistance box and turned down. I mean, not turned down, I mean, they sold off, but not reversed. Let's see what happens next week. So this week's low is really critical here for bonds.
Yeah.
If that goes, we're really, really, really done.
Could be off to the races.
Yeah. So high or low of this week's really important. Looks like to the downside. So we'll watch it. We'll see. Now crude. Oh boy, was there action there.
Yeah, there's big action.
Crude, I almost want to zoom in here.
Yeah, and I got some stuff to add on the weekly because it was a big bar on the weekly.
Yeah. So what happened? Crude, we got up to the 50%. I mean, the whole deal was, can we hold above it? Because first we held above 73.50, which was our sort of the critical number.
Yep.
The idea was that we want it, as long as we're above that, we can take on the 50%. If we can clear that, then we're off to the races, up to 90 or 83 here, and then 90. Those are the levels we're watching. And so what happened is, we had a triangle. Looks like we had a false break, or still it could be we broke out. And here's the check back. And the reason I see that, right? Because the lower trend line held, it held as of today anyway.
Yep.
So as long as that's holding, you can see we have higher lows in place. And this is the low that we call to be squared out, which I mean, it held pretty well for a couple of months. So
yeah,
I think so at this point it's kind of it's a sort of a hard call to make, so we'll have to go with 73.50. If we can recover that next week, I think we're back on. If we can't recover that next week, which means we probably took out the trend line, and then I'm guessing we're going to get back into some kind of consolidation here, between the low and 73.50. So that's my call. Again, Friday's high and low plays out for crude. If we take out today's high, then this was kind of a wash out or some kind of search and destroy mission, and we're back on the game.
Mm-hmm.
Let's watch that. A lot of news swirling around oil, so crude, everybody's on pins and needles.
The weekly gave us an outside reversal down.
That's right. Which is, I mean, if anybody's going to panic, that would panic people, right? Traders.
It's significant. Yeah.
It is. It is. So let's see. I just cannot. I mean, we obviously we go by charts, but you know, if I didn't have charts and I'm just looking at what's happening in the news and where the mind takes you, like, oh, what's possible,
Mm-hmm.
you wouldn't think this could happen, right? I mean, you would think.
Not with the way the world is, but that's the times it does, right? Confounds everybody, the
Mhm.
consensus.
Yeah. Well, it's funny. We should that should be a topic one of these days, but
Yeah.
how we look at news.
Yeah.
So anyway, looking at this, we're back in the same range. I mean, you know, we were consolidating here right through this range between 68 and 73 and a half. We're right back into it. And I'm guessing it should hold. If we get through here, then we're probably going to go down into the 63 area, down into 63 and a half, which is the bottom of that blue band that I have here.
Right.
So that's my take, unless this was some kind of a, you know, false move and we're back on up again. So
Yeah, I mean, thinking like a criminal, it would be just like them to go down and take all those stops and then run it up.
well, yeah, I mean, taking out last week's low, high and the low, I mean, you know, you got on both sides, right?
Yeah.
Especially
Yep.
weekly, you know, you got a little bit sort of better quality traders watching those and taking
Mm-hmm.
both out on both sides. Yeah. So let's see. For now, we don't have a whole lot to add to this other than the fact that we're watching 73.50, and that's really the pivot. You know, if we can get above that, great, which means that also means we held the trend line.
Sure.
It's like Monday, Tuesday. If we can't get above it, for sure, we're going to take out the red trend line and we're back in the chop.
Mm-hmm.
Or we go back down to test this 64.75, which would be the lows down here, basis the daily, right? Those are the choices. And we got the weekly number, we got the daily number. That's it. Anything you want to add?
No, that's it. We have to see if this weekly outside reversal is
Plays out,
significant
yeah,
or if it
yeah.
was a, false type move.
Mhm. It could, well, yeah, we'll have to see. And that 73 number will help us out.
Yeah.
Gold, well, we've been putting in like an expanding triangle here, and we're holding well above the 50%. It's not exactly bullish. If you look at the box here, we're consolidating. We're on the upper end of the box now.
Mhm.
So not much to say. I would say, you know, gold is kind of in a pause mode. Let's see what happens.
Yep.
Oh,
Expanding triangle, winding up.
Yeah, it's winding up to, yeah, it's something's happening here, but it's above the 50% of the square. So it could be that we consolidate in here. It's possible. I don't have a whole lot to add because it's really not moving right now,
Mhm.
especially after this week. And above 2000, this is the weekly, above 2000, it's holding fairly steady and the line looks really good. We're just sort of crisscrossing the 50%. So really the line is 2000 and 2100. There's $100 range here that we've been moving it through. And we're smack dab in the middle of it, off a couple of bucks. So might as well just let it sort itself out.
Let the triangle go.
Either at the lower end or the higher end, you know?
Mm-hmm.
So it just in the middle, there's not much to do. And that's one of those times when you say, you know what, I'll just wait.
Mm-hmm.
And copper is not so behind for I'll just wait because it's been doing the exact same thing.
Same thing, man.
Just wrapping around the 50%. You know, I was going to say, you know, when something's wrapping around 50, that means there's an upper band and a lower band.
Mm-hmm.
You know, where the upper wrap is and the lower wrap. So I was looking at 72 to see if that fits, and it fits pretty
well. Yeah.
We have a box here because we did square out up here.
Mm-hmm.
And I was thinking about boxing that up so we don't have to worry about it too much.
Mm-hmm.
And
that's good.
Right. So that's kind of the deal. Let's see what happens. In the meantime, yeah, it is wrapping around. Not much to do. Clearly not trending. So look at that. Look where the 50% is, exactly in the middle of the box, right?
Yeah, so I was going to say that 381 for me, and I think it's 383 for you. It's just wrapping around it.
Exactly. And when we went to the 72, the box is
It's a good
amazing.
fit, good
Yeah, it's a very
vibration.
good fit and nothing to do unless you're on one side or the other. 50% is good to watch, and we just slipped under it today. So it tells me we're just meandering around. So not exactly the market to be, not a market to be chasing.
No, sir.
We have copper. I think looking at the fork, we're pretty much done with that.
Yep.
It ran out. And we're left with a couple of triangles. We broke out of that triangle, the bigger one, the larger one,
Mm-hmm.
and came back to test it up 2 weeks. Of course, this week is not an up week, but an up bar. Sold off, but we're holding the 364.5 is sort of the key level you want to watch on the weekly and still be bullish. And so we're well above that, but we're not exactly above the 50% of the square of 90 here, which is around 4. So we're in between that. I mean, so there, if you want to do a box here, there's your box, and we'll just have to wait, see how it plays out. Nothing much to do here.
No, that's right.
And copper, I mean, really, there are periods, not just copper, all commodities. We can go for months and months and sometimes years not doing much, and we just have to watch it and not get involved. Moving on
For
to
sure.
the dollar, pretty interesting price action. I mean, God help
Mhm.
people that are trading currencies last couple of weeks.
Look at that. Yeah.
What a mess, eh?
Yeah. Total mess.
But what we notice is it's slowly picking up above the 50% of the square.
Mm-hmm.
So I think the dollar is looking strong, and when we get to the euro, you'll see how it's making a good corresponding move. So dollar, I think, well, it's clearly moving higher. It's getting above 103.5, which is more or less where the 50% of the square is. So let's just go with it. I think if we can hold above this 103.5, I think certainly can get higher to 107 again. So,
I mean, look at the symmetry. If it goes up into that next square, the top of the square and then to the 120,
yeah,
it would be perfectly symmetrical.
that could be, yeah. And currencies do that often,
Yeah.
very often. And it has a lot of symmetry. And look at all these ABCDs all over the map.
Yeah, that
So
symmetry would take it into that March time frame you were talking about. Mid-March, it looks like. What's the timing at the 120?
March 19th.
There you go.
Yeah. Late February, early March, there's a whole bunch of cycles there. So
Mm-hmm.
and sometimes, markets start to get pulled into one of those points, and nothing's going to stop them. So you really want to watch some of these markets that are running.
Right.
And if they're really moving, you don't want to get in the way.
No, sir.
All right. So that's the dollar. Let's take the dollar weekly. See how optimistic I am about the dollar.
Yeah, that ABC looks nice.
Yeah, it could happen.
Mm-hmm.
And so not much. We're moving higher highs and higher lows on the weekly. We had an inside bar here, broke to the upside,
Mm-hmm.
and we've had 3 higher highs. Hey, I call that a bullish trend. So
Yes, sir.
let's just stay with it. You guys have the numbers from the daily. I think we're okay. Is 108.045 was the 50% of the square.
It's just
And
starting to lose it.
we'll see what happens.
Yeah.
Now, once we talk about breaking above, holding above. So once if it gets below the 108 level and bumping up and can't really do anything, well, I think then really the pressure is to the downside.
Mm-hmm.
We'll just have to go with that. Especially if the dollar's, making some headway.
For sure.
Looking at the weekly euro. So this is our box, the lower half, which is the weaker half we were talking about.
Mm-hmm.
And here's our 108 level, which is the green dash line. So far, the calls, what we've called out has worked out pretty well, because we went up to 110, let's say 111. That was our resistance. We had equal equal moves that finished off that leg, started trading lower, and we said 108 was sort of the key level. It's support. If we slip under it, then we'll have to get down to the middle of the square, which would be 104. So let's watch out for that. Okay, let's watch.
First phase is accomplished. You're getting
Yes,
under 108.
exactly. So once we break this balance point here, and you can see even watching the price action above and below, this kind of cuts it in a good spot.
Yep.
Let's see what happens. Let us not forget square 90 high it made, low to high. We called that out. Pretty close to getting squared out. Pulled back to the 50%, very close to it. And at that time, we were looking for a higher low, right? I mean, a lower high.
And we got it.
And we got it, exactly. So that's what's happening. Well, we can look at natural gas. Well, your level is
we're just about there.
Level.
Yep.
Right there. And we have 4 days right on top of the level, right there. And we did take it when we took out the old low we had.
It's close.
Right? Yeah. Almost took it out, right? Not quite.
Yeah, almost. I'd like to see, I mean, listen, you don't always get what you want, but I'd love to see a little clean out low and reversal.
Yeah, definitely. Not this quiet kind of a low.
No, it's like too easy for people to get in. You want to be a flush.
Yeah. I'm scared.
So let's see. Yeah, let's see.
Yeah, we'll watch that. What else we have?
What's your Hang Seng look
Hang
like?
Seng, well, the low is holding. We
It
came
is.
down to finished up with the ABCD. We had some other squares here. Really, the low was right in there. Had a good bounce off of it and pulled back. Well, so here's the low. Higher low is holding. And we'll see what happens. I mean, clearly we want to get above the 50% of the square.
Yeah, that's key.
Yeah, which is about, let's just say 15,000, well, 15,750, let's say. If we can get above that, I think it'll be more positive and then can start to turn up. But otherwise, it's probably gonna, still on weak grounds. Not much to add. Well, this is interesting. It's a Bradley indicator.
Ah, the Bradley for this year.
Right. And I was looking at it. I was trying to see. I mean, the thing is, the Bradley is like all over the map, right? You just can't rely on it at all, basically.
Right.
And that's why I never look at it. But sometimes you get a fit, and sometimes other things can line up. And I was looking at. Oh, I know why I looked at it. I was looking at the 90 in time, which comes in about March 1st, right? Look at that.
Right.
It's the SPX. And I was looking at, so then I popped the Bradley up and go, hey, is there anything, I haven't looked at it for years, probably.
Right.
At least I look at it once a year. So well, perfect, February. And it looks like, we have a really kind of a strong move coming in, going into next week, well, middle of February, and then kind of, slows down. But the point is, that's not the point. The point is, then we have this big trending period.
After the 90.
After 90. And, just like here, sometimes when you get it from a corner, you get to the next corner. That's the trend. You can see the market kind of follows that,
Sure.
Not every time, but it can work like that. Anyway, that's what that is. I was looking at it and I just left it on there. So we'll see if that follows through.
Interesting.
It's possible that sometimes these trends can get traction.
Sure.
Especially when they're really steep, let's say.
Right.
And this is one of the steepest ones I've seen that's coming up. Now, it doesn't mean it's going down. That could also mean consolidation and we run up,
True.
Keep that in mind.
Very true.
Then we have, well, this is really, I love this chart. It's been very
The Dow.
clean. Yeah, it's been very clean. All
is
through
clean.
here, we were watching it sideways, wanted to break above the 90. We broke above the 90, had a triangle, came to the downside, did the false break, right? So here's the triangle, false break to the downside. This was very convincing.
Right.
Came right up to the 90, sold off. But what gave it off, it couldn't really get under 33,000. So
sure.
Snapped right back up, came up in here. You can see how it consolidated right under the 90. And very hard, clean break. And here we go. And the next stop was 50% of the square. So here's, for you guys, when we talk about breaking out, coming back to recheck and move, this is like textbook right here.
Perfect.
Perfect. So look where it's going. If we're gonna take this to its and it'll be
Goes to the
40,000.
180.
Yeah,
Yeah.
40,200. So there you go. I
Mhm.
think that's what we can look forward to. Yeah, looks good. Looks good. And we have a 360 coming. So imagine here's a 180 by 360 coming up here. If the Dow hits 40,000 in the middle of February,
Wow.
February 16th at 40,000. I mean, that would be amazing.
Absolutely.
All right. So it's good to watch these things. I think it's good to watch little markers everywhere.
Hmm.
See what's happening. That's all I got.
Okay.
Let me put it back to you, and we'll cover the commodities and NASDAQ, Bitcoin.
Yes, sir.
Yep. And if you guys like the show, please remember to subscribe and to like it. That'll be really good.
Absolutely.
And share the link with people that you think might enjoy it. So
Absolutely.
thanks. All right, let me put it back to you then.
Thanks. Good coverage.
Thanks. Well, Ben, the ABCD is like perfect.
It is.
Yeah.
And we made a lower high today, believe it or not.
Mm-hmm.
But let me show you something
And talk
else.
about mixed signals between all the
Yeah,
markets.
yeah, but look at this.
Yeah, that's nice.
Zoinks.
Yep, yep. Right to the square.
It's possible, right?
Mm-hmm.
That would get us up to about 19,370.
Well, that kind of corresponds with the big run registering on some of the charts we were looking
Yeah,
at earlier.
right. And I do think it's a possibility we're done up here, but there's also an equal possibility that we just keep going, and this is why we got to watch the levels. I'm going to take these ABCs off so people can actually see the levels, because they kind of cover them up. So we'll just take these off, knowing that they're there. The other thing that was interesting is I drew this wedge in. If we follow this wedge up, it gets us up into the area of that ABCD target.
Mm-hmm. Yep, yep.
So we'll see. The key level right now for this is the half square, right here. And that's 17,180.
Mm-hmm.
If we get below that and get stuck below that, then this becomes a false break. But as long as we're above it, I mean, it's going to push.
Yeah.
And as crazy as it seems, as narrow as the breadth is, as concentrated as the Magnificent Seven are, it's just you cannot step in front of that train if you want to survive.
Yep.
Until it gives us the signals that, hey, something's changed and
Mm-hmm.
something shifted.
Yep.
And for me, it's going to be this half square right here.
Yep.
The next attack on the upside is the full square, which is 17,900.
Mm-hmm.
And then if we sit on top of that, then we go, we just go again. Anything else to add on this? And then we'll just take a quick look at the weekly.
No, I think it's pretty clear cut.
Right. So we have an ABC completed here. So far we've got a lower high, which is hard to believe with the huge rally today that we made a lower high, but we did.
Mm-hmm.
And so next week we want to watch that, see if we can make a higher high. And then we watch this full square to see if it can get above that. All the levels that for the markets that I follow are up on a Google Doc spreadsheet, which when we post the video tomorrow, I'll post the link to that if you want to see where these levels are. Let's look at the weekly really quickly just to get a view here. Again, the massive week up, but it's a lower high. It's a down week. It's a down bar.
Mm-hmm.
So like you do a lot, Barry, I think we want to watch the weekly high and low and see which one gets taken out first to give us some clues there.
Yep.
And then on a square basis, we want to stay above this, 16, call it 16,900. That's the key on a weekly basis.
Mm-hmm.
So that's the NQs. Let's look at Bitcoin. Bitcoin's in an interesting spot because we had this square out, nice reaction off of it, pulled right back to structural support and above the full square. Now we rallied up and we're kind of stalling here on this half square. And this is going to be the big decision point. If we roll over and get stuck behind it, this thing could catch some momentum to the downside. On the other hand, if we keep, battling and sit on top of this, we get to push up here and we see if we can make potentially a higher high. But the key level here is this half square in this daily chart for me. It's right there.
Right.
42, 380.
Mm-hmm.
If we can stay above that and keep battling there, and push higher, we could do another leg up. If we get stuck below, we got to reassess. And then if we get stuck below and take out this trend line and this low, then we could see some real selling kick in.
Yeah.
Anything else to add here on Bitcoin?
No, we're good.
Okay. On the commodity side, it was interesting when I was doing the scans and preparing for the show. A lot of things are setting up, either setting up for a potential short on some markets or the one we were talking about last year, looking at the huge base cotton picked up this week. And if it can just get, like another 2-3 points higher, that thing could have a breakout out of a huge, huge base. And so those are examples of some of the things I'm watching. You covered, gold and copper, silver's in the same boat where it's just been, chopping sideways, sort of marking time with a, bigger picture bullish view. So we're going to be watching, the gold, the silver, and the copper for those breakouts of the sideways and the triangles, because the moves out of there should be pretty fantastic.
Mm-hmm.
The ones we're going to cover today are wheat and coffee. Let's start off with wheat. And the interesting thing is it looks like we're in this bullish sort of triangle and bullish consolidation off of this low, the low that we called out. You can see structurally, we're basically consolidating on top of that October, November, December, September base of the low.
Mm-hmm.
And so we're just looking for this break. This week, we ran up, then pulled back, and then now we're starting to push. As soon as we can push, and the all clear signal will be above the half square here around 652, 653. But the breakout of the triangle will happen much lower. And I think this thing it's just kind of waiting, marking time like a lot of things are in the commodity world, waiting to blow. The other thing I wanted to show you on the monthly, look at where we're battling, right at this 607 level.
Right.
And that's that half square. So we had uh, an up bar, down bar. Now we're inside for February so far. But if we can get a monthly close over this 607,
Mm-hmm.
that's going to be a base on which to push. It relative to the other grains, to corn and soybeans, it's acting so much better. So when
Mm-hmm.
this group starts seeing some action, I think wheat's going to be leading the way.
Yeah. Yeah.
Anything to add here on wheat?
No, we just have to, well, triangle is pretty well defined. So,
Wait for the break.
yep.
All right, and the last one, let's go check out coffee. Look at what this thing's doing. I mean, this to me,
Mm.
this is the battle, right? Look at this battle along this full square. But what you can see is, look at this all week. We saw people stepping in with higher lows all week.
Right.
And it's sort of pushing into this apex of this triangle, looking like we want to break up and push up and push higher. I love this chart. I think it's really good. When I show you the higher time frames, you'll see why, this thing has explosive power. Maybe not as explosive as Coco. Have you been watching Coco?
Yep.
The thing's a monster.
Mhm.
But the bigger
I mean, it's
lesson
flying at
there,
this point. Yeah.
I mean, the bigger lesson there, because I caught some of the move, but I
Mhm.
got out obviously way too early. But the bigger lesson is when you get one of these monthly breakouts, this thing can run for a year or more.
Yeah, exactly.
I mean, it doesn't just go 1 month or 2 months. It goes for a year, 18 months. It's massive,
Yeah,
massive moves.
exactly.
And when I show you this on coffee, you'll see something similar. Let's go to the higher time frames. So here's the weekly. If you look at since basically October of 2022, we've
Hmm.
been in this full square range, right?
Right.
And so this is the base that we're projecting if the bullish, indicators that we're looking at, if we break out of, you could basically have a 2-year base here,
Hmm.
almost 2-year base that we're going to break out of. So if we break out and then can sit on top of this is what we're going to be sitting on.
Right.
And look at what happened out of the, couple year base it had here. You got that kind of move.
Yeah.
And this could be similar. Let's look at the monthly and you'll see it from the monthly perspective. So we're sitting on top of this price action here
Hmm.
since 2015. And it's just a matter of, we came down, we tested this support here at the bottom of the range. Now we're at the top of this range. And if we can push through, again, it's like another half square on a monthly basis. Here it's about, call it 199. We get above 199, this thing can really fly. I mean, then we go up on a monthly basis, we go to 252, and then you break out of that and you're talking about the all-time highs.
Right.
Uh,
Yeah. Hmm.
anything to add here on coffee?
No, I think it's perfect analysis. Yeah.
Yeah, this is one of the ones I think is a gem. That along with cotton, which, once I get the breakout out of that huge base in cotton, or we get close to it, I'll start highlighting it on the weekly show because I think cotton's the other one that's building a massive base along with, sideways, along with gold, silver, copper, a lot of these nat gas you covered, if we can get the washout and get that ABCD completed down here, uh, again, another potential massive move.
Hmm.
When you're looking at these sort of bases, Barry, what's your focus? How do you like? Let's go back to the discussion we had on cocoa because cocoa made this massive move after breaking out of a base.
Hmm.
How do you focus on staying in something like that and not just grabbing a quick profit when you're talking about, weekly and monthly type bases that are
Well,
breaking out?
it's basically the counter trends. Can you want to put up a cocoa chart? We can look at it.
Yeah, hold on. So here's an example of the monster move in cocoa.
Mhm.
And
Well,
the question is, how do you ride it? How do you stay in it for the to the bitter end? I mean, you can see it's going parabolic now, so it's
getting
gonna
close.
it's gonna burn out on its
Hmm.
own.
Hmm.
But
So that's where you get, I mean, for one thing, a couple of things, right? One, you always want to keep a couple of runners in there. So then
right.
you catch the whatever part that you didn't expect.
Mhm.
And the time you get out of runners is when a prior counter trend is taken out, which would be that low right there. In the meantime, if you take it from the breakout time, you had the triangle breakout. We broke out a little bit, half a bar, then we pulled back in
In here. Yeah.
right there. Yeah, we pulled
Hmm.
back in, right? And then we got started.
And then we got started.
Right. So all through there, long, no problem. It's trending. Then we had one counter trend, 1 week inside bar, two inside bars, broke to the upside, came back down. You see the down right on top of right at the half square right there. You see the bar after that was an inside bar,
Inside. Yep.
right? So that's sort of the clue. Those are the kind of things we're watching. If the low of that got taken out, okay, that high is in place.
Hmm.
If it didn't get taken out, then we want to see a lower high, right? But if we take it out, then we're off to the races again,
Yeah.
which is what we got. And then we consolidated, pulled back, no higher, no lower high. We took off again. So basically, it's same as when we trade the lower time frames. You just want to be able to trap those counter trends and jump on it on the other side.
Right.
And the more vertical it goes, the easier it is to buy breakouts.
Hmm.
Like buying breakouts when it's going sideways, it's just dumb. It doesn't.
It's frustrating.
You can't do it. You can't do
Right.
breakouts. You can only do breakouts safely when the market's running.
Hmm.
So running and we have counter trends, right? That's really when it applies. And here, every breakout we got after a counter trend worked out, and also every reversal we got after the counter trend worked out.
Yeah, for me, it's always about that. It's the psychology. You're like, oh, I bought it so much lower. Why would I buy it up here? And you fight that mind game. And I think the way to avoid that is, as you said, just leave runners until a counter trend breaks a previous low.
Yeah, you have, I mean, most of the time you don't have to do that. Like if you're trading the S&P or something, you don't have to really do that. Um, but
It's
in
with commodities,
yeah, with
man, because they
commodities,
go.
yep, it's a different story. Especially, how you talked about this, like 5, 6 year sideways, it's
Hmm.
gonna go.
Yep.
And you can see how it's on fire. And we have plenty of other ones that are going sideways now. So that's
And
the
that's what I think's coming. I think this, and remember everybody, this is not a 60-minute chart or a 30-minute chart. This is a weekly chart.
Mhm.
So this is years. It started running in if you look at this a year
Last
ago.
year, last year,
A
yeah.
year ago.
Yep.
Yeah. February, January, February last year.
Hmm.
So that's a year's worth of
And
run.
the other thing is, once when a market is running, it becomes technically very accurate.
Hmm.
Like if you look at this technically, it's
It's
really
beautiful,
the
right?
market structure is perfect, pullbacks are perfect,
And the
full
square's
bottom
great too, right? Half
squares are
square
good.
here,
Yep.
full square here,
Mhm.
half square here,
They
full square
hold
here.
right above the prior resistance. Everything just like clockwork. And so that's the time to trade it. This is really the time. And
Yeah.
when it's going sideways, soon as we know it's not trending, well, you just sit back and wait for the trend to show up. And
And
it
here
does.
you
And
had
when
you
it
had to
does, it
wait,
never
you had to
misses.
wait years, but it was
Yeah,
worth it.
yeah, that's true. And we always talk about, well, trying to catch the low. You don't have to. You can see you caught it, you can catch it months later and you still
Yeah,
have huge amount of, time left.
right.
So yeah, yeah. And this is not done, but going vertical means we're getting close.
Yeah.
Yep.
And
Very
that's
good. Very
that's when
good,
we'll
man.
look at seeing it because remember these things do retrace and they retrace hard, so we'll be looking once everything's turned and support starts giving way and resistance starts holding and we have
Mm,
squares and we have all in cycles, there'll be a really nice short setup in this at some point. And that's just the nature of commodities, right?
yeah. Yeah. It's always counter trends and then leave some runners. That's really the solution. That
Yeah, but
pays off long term.
but what a move. What a move.
Amazing. And we caught
Yeah.
that. We called it out, caught it.
Yeah, we caught this breakout and we rode it up into here, but this I just
Mhm.
didn't participate there.
Mhm.
And it's always, and that's the thing about trading, and you can never do it perfectly. And you're always trying to improve, and it's accepting that and keeping sort of your mind from beating yourself up. That's super important. I mean, you want to talk a little bit about that, Barry? We don't talk a lot about the psychology of trading, but it's so important.
Well, I mean, psychology has to, well, before that, what I noticed? If you take
What's that?
if you take it, that your steeper trend line where it touches the second point it's touching right there. If
Hmm.
you do an ABCD, I think we're pretty close to hitting the high here.
Probably.
And some of these blow-offs, they end up in an ABCD. So it might be,
Oh, good eye.
it's right there. And so
And
we'll
we
see
closed the week on the high.
on the high. And for a commodity, that's not bad. Blowing
No.
through a little bit. It's okay.
Yep. Yeah.
We'll have to watch it next week. Well,
We'll have to see.
psychology wise, I mean, for me, it really ties into the approach. And in my case, it'll be, the squares and the other cycle work. Everything has to kind of come together to support my psychology.
Right.
And it really, I mean, it has to be how, your relationship with risk and reward and how you manage your positions. A lot of details come in, even though we can speak in simple terms. But the general theme is you want a set of tools that support your psychology and your sensitivity or your not sensitivity or your oversensitivity. You know
Hmm.
what I mean?
Hmm.
And
Know
the
thyself.
Absolutely. And know thy tool set.
Right, right.
So once you start trusting your tools and your work, then you begin to trust the entire system. Then you understand probabilities, and then the whole thing kind of snaps into place. But
Mhm.
till it snaps into place, all these pieces are sort of moving around, trying to find the right fit. And that could be a number of different things. So part of it's psychology, understanding how we respond to the markets and greed and fear and all of that, and how we can manage that through tools. And rest of it's practice, because you have to get some practice under your belt for the mind to sort of settle down and go with the plan. You know,
For sure. To trust it, right? To
to
trust
trust
what
it.
you're
Yeah.
seeing.
Hmm.
And it's the whole Mark Douglas thing too of, knowing that the accepting that the market can do anything and that we don't know what the market's going to do next. It's only about probabilities. And as long as you're playing the probabilities over a series of trades, you'll do fine. Any one individual trade, you'll never know what the
Hmm.
result's going to be beforehand.
Hmm. But what you do have is your tools and your experience that'll help you figure out the probabilities of the system, right?
Mhm.
So over 10 trades or 20, 30, 50 trades, you know where you land. So that's why you have to be very strict with the approach.
I
You
think
can't
the
jump
thing
around with tools and methods, though. That's the most dangerous thing.
Right. I think the thing I really liked about Mark Douglas when I read that was, and I've read it multiple times, it
Hmm.
is when he says you don't judge yourself on whether the trade was profitable or not. You judge yourself on whether you followed your rules.
Exactly.
Like if you followed your rules, it's a good trade.
Yep.
Whether you win or lose, it's a good trade. And
Hmm.
that when I remember when I read that, it sort of I couldn't sleep that night because it sort of changed my whole outlook on how I was looking at trading. And I was like, oh my God, I'm doing everything that he said don't do. Right. And
Hmm.
just by changing that,
Hmm.
it changed the stress level, it changed the attitude, the concern, the heart rate goes down. You're not nervous about any trade because if you're following your rules and you trust your rules and you've watched your rules and you've evaluated your rules, you are in the position that you can in the best possible position you can be when you're following the rules to be profitable over the long term.
Hmm. And what ties up with that is you have to be, even though following rules, you can't pick and choose, even with your rules, pick and choose the trades you're going to take. You have to take
No,
every one that sets up
every
under
setup.
your rule sets, you know,
That's right.
and then you're okay. Then the probabilities are on in your favor. So yeah.
And that's where it comes in. What he's saying is you judge yourself on, did you take the trade when the setup showed,
Yes.
right?
Mm.
That's a success if you did.
Yeah.
Not whether was that trade profitable, because that any one trade you don't know.
Hmm.
You judge yourself on a series of trades. So I can't recommend that book enough for people.
Hmm.
The Mark Douglas book,
Both
trading
books.
in the zone.
Yeah.
What's the other one he had? I like Trading in the Zone as the
I
best
think
one.
that's really the book, because that's the one that really drives home the points. I think if everybody can read that, I think we're in good shape.
Right. If you're having issues with psychology or fear or uncertainty, read that book. It'll help you get the right mental state to approach your trading, and I think it'll make a difference. I know it definitely did for me when you told me to read it, and it was really really good.
Hmm.
So anyway, the upcoming week is, I know we say it a lot, but we are, especially in like ES and NQ, we are in, knife's edge territory. We either got to keep going or we got to go sideways to keep this bull going. It can't really pull back sharply, because if it pulls back sharply, we're going to get the sort of false break
Hmm.
signals, and it could sort of feed on itself. I mean, do you sort of agree with that assessment? That's kind of how I feel right now looking at it.
Well, I'll tell you, it's a really interesting time, or time window, because Well, for this reason, because if you look at the Dow, it's doing one kind of a thing. If you look
Right.
at the NASDAQ, it's doing another thing. You
Right.
look at the S&P cash, it's kind of doing its own cycle, and then the futures are doing another thing. So yeah, they're going up, but the patterns are very different. And well, that's perfectly normal, other than when you have cycles coming in for each one of those.
Hmm.
So it's caught up in a place where they're not all on board, but they're all somewhere in there, somewhere in the middle. So even like the Nasdaq, if the Nasdaq closed higher and cleared that square, we would have said, well, wow, look, everything's breaking out, everything's ready. But what's happening is not everything's breaking out, just some things are breaking out,
Right.
and the other things are squaring out. So it's no, it's a odd place to be, just like we saw that 108 square coming up on the 72 that we
Yeah.
looked at.
Talking about NQ, I wanted to show you that.
Mhm.
Yeah.
So, so it's kind of an interesting, it is a knife edge in the sense that it's a different kind of a knife edge because each market is grappling with its own individual cycle. Let's,
Yeah. And let me
you
give you an
know,
example.
and
When
any one of them could drag the rest of them down. So that's kind of what it looks
you
like.
just jogged my memory. So from the December 4th low here,
Hmm.
Monday is 45 trading days.
Okay.
And that's a unique cycle to the NQs. It's not the same in ES because
Hmm.
we didn't make a low December 4th then.
Right.
So it's a little bit different, but again, it's that which one of these cycles is going to grab hold? We don't know. We just have to watch the price action. Like
And the
on this
flip
one,
side, and the flip side of that, Ben, is if they all sort of get above their own levels, then they're all going to run. That's the other
yeah,
part.
that's true. And so again, it always boils down to watch the price action at the important levels.
Hmm.
And then once that level is established or lost, you know what to do.
Yeah,
And
exactly.
it's really that simple. I mean, we try and complicate it. Everybody tries to complicate it with this indicator, that thing, this cycle, that thing. It really is all about finding the right levels and then watching price and how price interacts with it.
I mean, right now, all the momentum-based indicators are dead.
Yep.
At least in these markets we're talking about that are running.
Mhm.
So you really need geometry. This is why we stick with that because it works, no matter what the conditions are.
Right.
And if you don't have the timing, if you don't have the levels, momentum, there's no way. They're all tapped out at this point. So,
Right. And the thought that comes to mind that I'll leave everyone with is may you live in interesting times.
oh boy.
We certainly are, and it's not
Mhm.
going to be boring. And we said that coming into 2024. Look, it's not going to be boring. Um, the commercial real estate crisis seems to be brewing. There's trouble in bank land.
Mhm.
It's just going to be a wild year. And what we're going to do is stick with the things that we know work. And
Yes.
we're going to share that with you guys, and we'll be able to get through this, not only get through it, but get through it profitably. And
Mhm.
that's what the goal is. So rest up, everybody. Next week's again going to be a busy week. Great show, Barry. Good coverage and really putting a good sort of a simple way for people to look at this. And I think, boiling down the complex to the simple is really, what the goal is in the market is, break it down to one or two things that you can watch, you can monitor, are clear cut, and then you can make, better decisions about how to trade. So everybody have a great weekend. Please make sure to subscribe, like, share the channel. We really want to grow the channel this year. We're going to try and get it. The first target's to get it up over 1,000. Help us do that. We'd appreciate that. And we'll talk to you next week.
Thanks, Ben. Good job. We'll see you later.
Thanks.
Ciao.
Bye.